Welcome to Drill Down Earnings. We have quarterly results out from Tesla. I talk about the 50 most important companies in technology, and Tesla is certainly one of those. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research, and Tesla's Q3 earnings were okay, I guess, compared to expectations. The company actually missing in terms of earnings per share, and I think Wall Street didn't like that initially. The stock sold off, came back a little bit in the conference call, but let's dig a little bit deeper here beyond the miss or the beat. Profitability was just not what people expected. I think people knew that during the quarter, there was a big boost in the sales of electric vehicles, particularly for Tesla, more so than the rest of the industry. We compare the results from Tesla's growth to the Cox Automotive numbers that look at all U.S. growth, because U.S. subsidies for electric cars are ending under the Trump administration. So third quarter sales might have been the last hurrah for subsidies in the U.S. for electric vehicles. And as a result, there were people rushing out to get the $7,500 tax credit that was available for many electric vehicles, knowing that that was it, that it was going to go away. So we knew this was going to be a strong quarter. Very curious about the guidance of what's going to happen next year. So boosted by subsidies, we saw a 12% rise in revenues, and I think Wall Street kind of expected that. But profit margins are slipping. Profit margins down to 6% in terms of operating profit margins for Tesla. And they've been coming down for quite a while. You need to look at these things on a year-over-year basis. But a year ago, Tesla was doing almost 11% operating margins. Now it's only 6%. That's a significant drop there. And their automotive sales, again, up 6% thanks to those expiring tax breaks. It really helped. Their global deliveries were up 7%. So price cuts meant only a rise in revenues in that segment of 6%. But almost 500,000 cars in the quarter, vehicles in the quarter, including record volume Y numbers. It looks like, again, the Cox Automotive numbers told us that Cybertruck is actually not doing very well at all, but it's a tiny thing, but their Model Y is doing quite well. And there's a lot of focus and a lot of investor focus in particular on all the other stuff Tesla's talking about, robots and semis and robo-taxis and all these things that Tesla doesn't actually do right now. Oh yes, of course there's AI and data centers as well, but there are three segments: automotive, energy generation and storage, and their services business. Look, the energy generation and storage business is now up to 12% of revenues. It has bounced back. It's been very uneven in terms of its growth, but on a year-over-year basis, up 44%. Pretty impressive for that business. It's now nearly a $3.5 billion quarterly business. Again, operating that business at about a $14 billion run rate. That's pretty impressive. And record number of deployments. In terms of number of gigawatts, they did 12.5 gigawatts, driven by their mega factory in Shanghai and strong Powerwall demand, and its profitable business as well. Gross profits of $1.1 billion there. They talked a lot about their AI business, both in their press release and in the conference call. Their AI 5 chip that they're making with Samsung and Taiwan Semiconductor. Elon Musk said it's going to be 40 times, not 40%, but 40 times the performance of their last chip. And talking quite a lot about that. But when we look at all these other businesses, they're more than they used to be, but they're still insignificant. 80% of revenues here are indeed automobiles. Now, there was conversations about the robotaxi service in Austin and maybe here in the Bay Area, but the bottom line is there weren't hard numbers about how many cars are deployed, and to talk about new geographies, but if those are only a few cars as there are in Austin, maybe it's not that big a deal. After all, they say they've got 1.25 million miles logged, but I can tell you when I look out the window, fact checking myself, I see one Waymo out there. There isn't a single Tesla. Any more Waymos? Yeah, one. Yeah, there was one. Anyway, let's talk more about the tax credit. So there's zero emission tax credits that they report every quarter. They've long said those are going to go down, but they haven't been going down. If you look at the gross margins of this business, because a tax credit has no associated cost with it, it pretty much just flows right down to the gross margins or to bottom line or even free cash flow. If you take out the zero emission credits, the gross margins go from 17 to 15%. Now, this quarter, they had a reversal. They had some interesting changes in operating cash flow that led to a lot of free cash flow in the quarter. And people have criticized, I have criticized the company, pointing out that without the automotive regulatory credits, they wouldn't have much free cash flow. In some quarters, they'd have zero free cash flow. But this quarter, they had, honest to God, tons of free cash flow. Now, again, it looked like changes in working capital were about $3 billion. So if they had $3.5 billion of free cash flow without the regulatory credits, and $3 billion was a reversal of some adjustments to working capital issues, that might not be sustainable over the long term, but it was a good quarter in terms of free cash flow production. I'm not calling it monkey shines. And I love to call things monkey shines, but this may be a 1 quarter phenomenon. And in terms of overall share of EV sales, look, EV sales have actually turned, I've said for a long time, EV sales are going up even if Tesla's sales growth is going down. Well, in this quarter, EV sales on a year-over-year basis were actually down for the rest of the industry and up for Tesla, which meant that they had a 52% share this quarter of EV sales. We'll see what happens because so many automakers are pulling back. I just gave you a lot of information. How did the stock market take it? Well, the stock market sold the stock off down 3% in after-hours trading. Well, let me double check that. Down 3.5%, let's call it 4% in after-hours trading. It's kind of the end of the after-hours session. But that's after a fantastic 100%, 103% gain in the last year. Now, on the conference call, Elon Musk talked about all kinds of things. It's interesting that there's sentiment on Wall Street that the stock trades based on what Elon says, and yet there's also sentiment in Wall Street we shouldn't pay attention to what he says, particularly around deadlines, because they aren't to be believed. So I don't know what to make of that, giving heavy weight on something that is meaningless. The same people say it's meaningless, I don't know. But when it comes to talking about safety issues, something that's been a lot of coverage, and we've seen reviews of the National Highway Transportation Safety Board, Bloomberg in particular, has done some fantastic reporting on this issue. My former employers, indeed some of my former friends at Bloomberg, have done a great job in this story. Elon Musk just blowing it off, talking about self-driving endlessly, talking about the killer apps. I mean, I think when you're talking about vehicles where people, particularly the Cybertruck, where people have died, young people have died, and calling it a killer app seems really insensitive to me, but sensitivity is not a calling card of Tesla CEO Elon Musk. What he talked about was that self-driving cars should make the world safer, even if his cars might not be making the world safer. This is, and it was a controversial issue, so I hope some of you are throwing things at your computers and phones as you watch me right now, but don't do that. Listen to what Elon Musk had to say.
Like, here's the killer app, really. What it comes down to is, can you text it? Can you text while you're in the car? And if you tell someone, yes, the car is now so good, you can be on your phone and text the entire time while you're in the car. It's anyone who can buy the car will buy the car. End of story. That's what everybody wants to do. In fact, not everyone wants to. They do that. That's why, in fact, the reason you've seen like that there's been an uptick in accidents pretty much worldwide is because people are texting and driving. Autopilot actually improves the safety here because if somebody's looking down at their phone, they're not driving very well. So that's really the game changer.
So a game changer, perhaps, but this full self-driving thing is not a thing in the real world right now, but it's something he dreams about and talks about quite a lot. But what's your drill down earnings takeaway? What's the one number that tells you a whole lot? Well, first, I'd like to ask you to subscribe to this channel or click follow. It would really help us out as we try to grow this Epistrophy Capital Research business and this media that we're creating here. But let's look into the numbers real quick. So your takeaway on Tesla's Q3 earnings, your essential summary, is that the quarter was a good quarter in terms of revenues and revenue growth, boosted by tax subsidies going away. So people in the US, knowing that their $7,500 tax subsidy that has helped Tesla so much went away at the end of September, they rushed out and bought these cars, and it showed up in Tesla's numbers, but it didn't show up in profit. So revenues were boosted by the subsidies to a tune of 12% on a year-over-year basis. But those tax credits are going away, the zero-emission vehicle credits are going away, and Tesla has depended on those for its free cash flow and its meager profits over the years. I promise you to bite the drill down earnings bite, the one number that tells you a whole lot. And on a trailing basis, if you take 12 months of net income and 12 months of these zero-emission credits were 42% of the profits for this company over the course of the last year, and they're going away. So it's a reason to keep an eye on what's going to happen in Tesla in the near future without the help of the federal government that has been supporting this company for so very long. All right, thanks for checking out Drill Down Earnings. Hey, follow me at X at Cory TV. Lots more content coming there, as well as on TikTok, Instagram, YouTube, heck, Spotify, iTunes, you name it, at Drill Down Pod.